What's going on, guys? Jeff here. Today is Wednesday, and I'm going to be going through a little bit of what's going to be happening today in the market as well. So, of course, first off, we are going to be talking about the FOMC meeting that's already happening right now, and we'll be listening to Jerome Powell talk later at about 2:30 a.m. But about 2 a.m., we are going to be getting the FOMC summary for it. There won't be any STP for today's meeting. So there won't be any economic projection for us to really look at, which is why most likely we'll not be looking at inflation projection. We'll not be looking at GDP projection, and we'll not be looking at any sort of dot plots for the coming year and such. But of course, that will be the SCP will be coming out for the next FOMC meeting. So of course, stay tuned for that. That's going to be very, very interesting for us to really look at, especially with the miss on GDP for this current quarter, because that is a huge telltale sign that we are going to be entering a form of a recessionary trend by missing GDP. That's first of all. So yeah, we'll be talking about the FOMC situation later on. I already uploaded a video on my channel talking about my own expectation on the FOMC meeting. So if you're interested, just check it out over there. Basically I'm just talking about how, what's the basis point that I'm looking at the increment to be coming in as well. And of course, with the various questions that will be asked during the panelists between Jerome Powell and all the Q&A session. But anyway, without further ado, let's cover some news today. All right, so first of all, let's talk about Elon Musk again. Because yesterday, Elon Musk actually said something very, very important. He said that he plans to take Twitter public a few years after buyout. Okay, so for people who are unaware of this whole situation, of what is actually happening, you kind of take it as Elon Musk is a chef. Okay, he's a chef. Okay, he's buying up ingredients that are not so good, and then he's gonna cook it up. Okay, with his own skills and technique, and then he's gonna serve up a very, very delicious dish, and afterwards he's gonna be selling it. Okay, so what's happening is that he actually bought over Twitter. Of course, in his mind, he actually thinks that Twitter is a little bit underpriced at $54.20. Upon him buying this over, he's actually expecting to do a flip in 3 years. So what he is intending to do is to just completely open source the entire Twitter, hoping to just, sun dry out all the wrongdoings of what Twitter has been doing, censorship and such, getting rid of the anti-free speech movement that's happening in Twitter, and of course, getting rid of all the bots. Okay. Afterwards, after doing so, he intends to actually bring Twitter back via IPO. Of course, I do not think that there's going to be a spec acquisition. So I do think that there is a high possibility that they are just going to be coming back as Twitter again or whatever it is. But yeah, that's going to be very, very interesting for us to really look at, because if Elon Musk plans to take them private and then afterwards get them back up again, that's going to be quite interesting, because I'm pretty sure a lot of people would want a slice of that pie. Of course, you have a lot of people talking about how, people are questioning Elon Musk about how they are able to invest into this opportunity, because of course, if you are invested into Twitter after they actually get delisted, you are most definitely going to be bought out by Elon Musk instead of anything. So there's not really much upsides to it. And of course, at the same time, if Elon Musk, the deal between Elon Musk and Twitter do not actually go past, you only have downsides to bear. Because if the White House step in, or if Biden administration step in, or the SEC step in, if any of them steps in and stop this deal, be it for monopolizing or for antitrust situation or anything of that nature, okay? If anyone step in and this deal just break through, okay, first of all, Elon Musk have to pay a breakthrough fee for this whole entire deal going bust. Afterwards, people who are holding onto Twitter, it's not going to get bought out at $54.20 anyway. And that's going to be a huge worry for the entire market. Because when that happens, it simply means that what's going to happen if I bought in at $49 and now I only have downsides to bear instead of upsides to carry? So that's why the thing is that I wouldn't really recommend people to really jump into Twitter, honestly speaking. Of course, we're expecting the deal to be like 80% past, but nothing is certain until it's actually signed and done. So I wouldn't want to, encourage for anything otherwise. So what Elon Musk basically wants to do over here is taking Twitter public a few years after the buyout. Okay, so pretty interesting. Okay, so he said that he plans to stage an IPO of Twitter in as little as 3 years of buying it, according to people familiar with the matter. The deal is expected to close later this year, subject to conditions including the approval of Twitter shareholders and regulators, the company said. Okay, blah, blah, blah. Let's see. The rest of the money coming from loans, one firm, blah, blah, blah. Okay, Mr. Musk signaled that he plans to do something similar that could help assure potential investors that he would work quickly to improve Twitter's business operation and profitability. So, of course, as much as we have seen Elon Musk at work, okay, we've seen Tesla, we've seen PayPal, we've seen the Boring Company, we've seen SpaceX, okay, chances are we want a piece of pie for Twitter, okay? So if you want a piece of pie of Twitter, okay, what's going to happen is, right now Elon Musk is not able to keep every single investor for Twitter, for sure. So what he's going to be able to actually hold, if I'm not mistaken, should be about 2,000 investors only. So anything more than 2,000 investors, basically he and alongside with the 2,000 investor would have to basically buy out the entire leftover shares. Okay, so. Of course, there are also ideas that are being floated around saying that people should just create a C Corp holding company, kind of like a shell company, kind of like a SPAC company, buying over Twitter shares, essentially making it into one shareholder, listing that company so that people can actually buy into that company and essentially get kind of exposure to Twitter indirectly as well. That kind of works as well. So of course, right now, the entire Wall Street thinks that Elon Musk got the hands of Midas. Okay. So, of course, we will want what he is working on. But right now, of course, if Twitter is going to be going to become a private company, there's not a lot of ways for us to really go around it. So, of course, we are hoping to see Elon Musk actually make a workaround for this, hopefully in the next few months to come. If I'm not mistaken, because if the deal is going to be going through by the end of the year, we'll definitely need this holding company or this C Corp company to actually come out by about October or November period of time, simply because the IPO process is going to take some time as well. If he don't intend to go through the SPAC acquisition, but there is also a very high possibility that he's going to just work with a SPAC as well. So I'm not very sure how that's going to work out, because a SPAC is going to be the best way to actually go around it, because basically we're using the whole technicality of how SPAC is actually being worked on, kind of just throwing it into this and then just buying more of Twitter to hold into indirect equity of Twitter as a whole. All right, so he has given a few details about his exact plans for the company, other than that he wants it to be less censorious in content moderation. At one point, he said he doesn't care whether he makes money on the deal. Mr. Musk has a history of missing his timelines and targets at Tesla. Okay, honestly, I do feel that this is a very bad jab. Okay, I think that because Elon Musk has always said it himself, he likes to think big. He likes to aim far away. Okay, what Elon Musk thinks is that if I think that I would want to achieve something in 5 years, whereas in actuality it will actually take 20 years. Maybe I'll take 8 years. Okay, I might exceed my timeline, but at the end of the day, I'm still gonna get there faster than if I actually set my mind to it. So I do think that there's not really much of an issue for him missing his timelines. Honestly speaking, even for what's happening with the Cybertruck as well. Cybertruck was meant to be coming out in 2021. Of course, right now we're expecting it to be coming out in 2023. And needless to say, we can also put this into a possible fault to the whole pandemic and also supply chain issues. I do think that those are actually viable excuses and such, as with all the other companies out there as well that are actually being affected by it. So I think that that's kind of like a weak jab on Elon Musk. But yeah, okay. Yeah, so basically that's kind of what is happening for this news. All right, next up we have social media startups take aim at Facebook and Elon Musk. It's called a Halo app, among new companies founded by former Facebook and WhatsApp employee trying to reshape online discourse. And I do think that this is going to be happening more and more often. Okay, it's not just going to be this Halo app. It's going to be another app. It's going to be app B. It's going to be app X. I don't care. Okay, this is going to continue happening. Okay, and the reason why this is going to continue happening is because after what Elon Musk actually did with Twitter, he basically just opened up the entire thing and say that, free speech as a whole is very, very important to the American Constitution. Okay, and because of how important it is to the American Constitution, chances are people would think that, your Pinterest, okay, your Snapchat, your Facebook, your meta platforms, all of these big companies probably have things that they should probably air. Okay, and in order for them to air, smaller companies are the one that comes up with the quick and fast jabs at all those bigger companies, because they can come up with those quick solutions that you never know. Those quick solutions could easily be a quick fix for those big companies, but those big companies tend not to take those feedbacks. But of course, we like to see what's going to be happening, because for this Halo app, they actually talk a little bit more about it over here, which is let's see. Okay, yeah. So 2-year-old startup this time, however, they aren't focused on maximizing how much time people spend on their app, or prodding users to expand their online networks of the greatest possible size in order to attract advertisers. So basically, they are trying to change up the entire social media funnel. Okay, how social media has always been from the start. Okay, it's not just your Twitter, it's not just your Instagram, it's not just your Facebook. Okay, we go all the way back to your MySpace era as well. It has always been the same thing. They want to keep you on their platform as long as they can, even until now, even with TikTok as well. They want to keep you on their platform as long as they can. Okay, but right now they're actually starting to think that there should be a different way for you to actually go around doing social media. And if they want to go around doing a different way of doing social media, you should not just prod your users to continue to just stay online and kind of just expand their online networks as much as they can, in order for them to really attract advertisers. But of course, at the same time, then you're going to just bring up future questions, which is like, how is this company going to make money? Because a lot of the social media companies are making money from advertisement. Okay, and advertisers would only go to your platform if your users are constantly on your platform. Okay, think about your Facebook ads, think about Instagram ads, think about your Pinterest ads, think about Snapchat. Okay, all those advertising that's happening, that's actually helping the company make money, okay, because people are staying on the app a lot longer than expected. Okay, so of course, if you were to actually take that part out, I do see advertisers kind of basically just, okay, you know what, probably we'll have to pay you lesser, simply because if we were to put in $1 into your business, it would be easier for us to actually put in $1 into Google or into Facebook or into Twitter or whatever it is, because that $1 is going to go a further distance than whatever dollar I'm going to put into your company. So of course, then you're going to have a whole new other issue, which is how you're going to make money for the company as a social media platform that don't really prod user to actually continue to stay on the network. But of course, I do think that Gary Vee actually talked about how he envisioned a social media platform of this sort of nature. I think he actually talked about it back in 2015 or 2016 along that line. So of course, I do think that that is a possibility, because if you're talking about how it's not going to be money generating, but then you have to really get back into the possibility of how then there's going to be your back end, your cash burns, your rental, your operational costs. There's going to be a lot of cash burns for this, which is why it doesn't really make sense for this to just be a social media platform that everybody would want to use without paying money for it. Of course, for this Hello app, they actually introduced something interesting, which is actually just paying money. So instead of ads, Hello app plans to charge subscription fee, likely $1 or $2, and less than $5 a month. Groups inside the apps are capped at 50 people. You don't want to lose the plot by growing too quickly. Which similarly, again, I do think that it's going to be a whole Clubhouse sort of thing again, where it's going to be crazy hot for the first few months, and then afterwards, people start to really lose it, because it is a lot more comfortable for you to actually go back to your other apps, and people might not be so comfortable paying $5 a month for a social media app that they can basically still do the same off with your Twitter, your Twitter groups, your Facebook groups, and such. So I do think that unless they are doing something that's completely different, which I don't think they are really doing something that is like crazily different in terms of a social media design. So yeah, I do think that that's kind of like my problem with this social media app. All right, move on. All right, so for this one, Derby's take on the 75 basis point rate hike. The rise bet didn't gain traction with a Fed official. So let's just zoom this in. Okay, while the Federal Reserve may be behind the curve in getting inflation under control, St. Louis Fed President James Bullard, James Bullard has always been a hawk, has generally been out in front among policymakers in calling for aggressive action by the central bank. So Bullard, a central bank veteran who took office in 2008, was among the first Fed officials to speak out about the need for the central bank to shift gears on its effort to reduce its balance sheet, which has swollen as a form of stimulus and was at the forefront in calling publicly for interest rate rises to confront some of the worst inflation readings seen in 40 years. So, of course, like I said before, we all started hating Bullard, and then we slowly realized that actually Bullard is doing the right thing. I'm going to be upfront about it. I don't think that at the start I didn't like Bullard because of his hawkishness, but at the end of the day I do realize that if we continue on this this very steep trend for hyperinflation, we definitely need to scale down on the balance sheet. We definitely have to scale down on the MBS, which is the mortgage-backed securities. We have to definitely scale up on your interest rate hike in order for you to actually bring down the inflation rate quickly. Even if it's going to be forcing a recession, I do think that that's going to be essentially important in the long term. All right, so over here, afterwards, he basically said, Bullard's hawkishness has been such that he even dissented at the Fed's March meeting, where it raised its federal funds target rate range by a quarter percentage point to between 0.25% and 0.5%. At the time, Mr. Bullard said he favored increasing rates by half percentage point to quickly normalize monetary policy. Minutes from that meeting indicated other officials would have joined him if not for the uncertainty created by Russia's unprovoked war on Ukraine. So for people who forgot about what happened in the March FOMC, happened on the first week of March, and of course, we all know what happened on the 24th of February, which is the whole Russian invasion on Ukraine. So we are expecting a 50 basis point increment as it is, but afterwards, because of the whole invasion, that kind of just messed up with the oil prices, messed up with food prices and such. So the Federal Reserve think that the economy wasn't exactly ready for a 50 basis point hike, which is why they went with a 25 basis point hike. And chances are, because of what happened in March, chances are it's going to be solidifying more on why we're going to be getting a 0.5 basis. We're going to be getting a 50 basis point hike for this FOMC meeting. At least 50 basis point hike. I do think that 75 basis point is definitely on the table, but I do want to lean more towards the 50 basis point hike. All right, so let's move on to the next one, which is stock future edge up ahead of Fed's decision. So of course, a lot of people are already trying to price in on the market, and basically the whole entire economy has already priced in a 0.5% increment. So contracts for the tech-focused Nasdaq went up by 0.2%, the S&P by 0.3%, the Dow by 0.2%. Basically all of the futures are actually going up a little bit. People are expecting it to be 0.25% to 0.5%. However, my own personal expectation is going to be 0.5% to 0.75%. Of course, I do expect that this is already priced into the market. But nevertheless, in my video that I have for my expectation as well, even if it's going to be a 0.5% or a 0.75%, nevertheless, even though we already consider it as priced into the market, people are still going to panic when the news actually drops. People there's still going to be those overly optimistic people who think that it is going to be a 25 basis point hike, and upon seeing 50 basis point hike, they're still going to be selling. So there is still going to be some form of a selling pressure happening upon the FOMC meeting dropping. So something for you to actually take note of as well. Something that I will be keeping a very, very close eye on later on as well. All right, so moving on. Do you have anything else? I did see that they have a new. Okay, Wall Street is betting inflation is here to stay. You know, expect inflation to abate from its current 40-year high, but its decline will be slower than previously thought. Yeah, boring. All right, next up, we have India's largest ever IPO will test foreign investors' appetite. All right, so they are talking about the Life Insurance Corporation, which the government is selling a 3.5% stake, estimated to be a $2.74 billion. The LIC commands about 2/3 of the life insurance market in India. The IPO will be a proxy for foreign investor interest in India. Okay. Okay. Honestly speaking, right now, I think it's the same thing for IPO. Okay. You know what? Actually, since I'm going to be going overseas next week. This is going to be one of the other video. I will be talking about the IPO in general. I think that this is going to be this is going to make for a good video as well. And it is going to be a little bit more evergreen, especially for this sort of content. Yeah, I'll be talking more about the IPO for one of the videos for next week. You know, just remind me that. All right, next up we got Jim Cramer defending Jerome Powell. Jim Powell, inflation's policy ahead of the Fed rate decision. He's winning. He wants to take the air of everything I just mentioned. And guess what? If you look at the stock market selling for the bulls, or perhaps good for the economy and the country, he's winning. I'm sick and tired of the critics who keep trying to belittle or humiliate Jay Powell and the Fed chair, who arguably did more to save us from a pandemic-induced depression than anyone else in the government. They act like Jerome Powell should have known Omicron wouldn't require a lockdown. Jay Powell measured his words. He wants to take the air of everything I just mentioned. And guess what? If you look at the stock market, selling for the bulls, or perhaps good for the economy and the country, he's winning. Yeah, I mean, you know, Jim Cramer has already made a lot of bad calls. But yeah, I do think that he's right about this. You know, I do think that Jerome Powell actually gave a lot of value to the economy for what he has done to the economy as well. I do think that what Jerome Powell has actually done, especially since the start of the pandemic, the moment he actually started to drop out rates. Of course, you know, I think that, you know, Jerome Powell actually came in 2018. So we have to actually talk all the way from 2018. So the 2018 dropped to 0% out of nowhere. That was a little bit scary. With Jerome Powell basically just stepped up to the plate and really reacted to it quickly. Right after that, we have the 2020 short recessionary trend back in March 2020, which Jerome Powell also, of course, alongside with all the other countries, where we actually started to get a global lockdown in the March of 2020. Then afterwards, rates went down basically to zero, even negative rates for some areas as well. Afterwards, you know, we started to look at monetary policies. We started to look at your MBS. We started to look at your balance sheets. And then afterwards, Jerome Powell started to try to stimulate the market a little bit by really lowering rates and also increasing the MBS by a huge margin as well. So yeah, I do think that Jerome Powell definitely did a good job as a Fed chairman, which is why I'm very, very happy that he's able to serve his second term as the Fed's chairman. So yeah, you know, I'm not sure if people are really bashing on Jerome Powell as a meme, or people are just bashing on Jerome Powell because people actually think that he's incompetent. I don't think that he's incompetent. I do think that he's really doing the best that he can. Just that, you know, at the same time, there are a lot of things that, you know, just cannot really be measured from our own point of view. And of course, you know, if you're talking about how Jerome Powell is incompetent, people usually like to link to the possible, inflation is transitory speech, where Jerome Powell thought that, you know, inflation was going to be transitory for 6 months straight. But let's be honest here, okay? Not a lot of us were expecting supply chain issues to really be stagnating for a very, very long time. We wasn't expecting you know, new variants and new sub-variants to keep on coming out. Okay, when he said that it was transitory, okay, we just passed Delta. Okay, and then afterwards we got Omicron, and afterwards we got the sub B221 variant, and afterwards now we got another new sub variant. Okay, so constantly there are always new progression that actually comes about. So I do think that Jerome Powell is actually doing the best that he can to actually ensure that the market is not tanking as much as it can. But yeah, basically that's kind of all I have for this sort of things. But anyway, that's all I have for today actually. I'm going to be keeping my eyes peeled for the FOMC meeting later on. I'm not sure if I'm going to be making a video later on immediately after, or I would just make a video the day after, which is tomorrow, because I am a little bit tired from work, and tomorrow I also have yet another long day at work again. Anyway, thank you guys so much for watching, and I will see you guys tomorrow.